We have never seen the statistics so skewed. We are in a time in which the money that has been pushing up the markets has nowhere further to go. The level of optimism is at the highest ever in history, and yet more is being demanded. 1.9 trillion more? Well, we'll see. But it doesn't matter because mathematically, it's already set in stone. The devastation of a devalued currency will hit so many people, and of course, there's nothing that can turn it around. You came here for the truth, so let me unveil that for you. I have to bring the truth out here because, quite frankly, the majority of whether it's the mainstream, the alternatives, they don't want to talk about it. Oh, it's pessimistic. Oh, it's bad news. Why are you always bringing out this? I want the kittens. I want the rainbows. I need a unicorn or two, please. Well, you know what? This is the type of stuff that we need to hear. It never feels good to talk about something that you know is coming at some point and it's not going to be good. However, this is what we got to deal with. And if people aren't prepared in advance, they're going to be in trouble. You don't prepare after the fact. It doesn't work like that. You have to have all your ducks in a row, they say. And there's so many other silly cliches. But when we look at all of what's been going on in the markets, in the bond market, in the stock market, in every single one that connects in the financial system, things are getting wacky. You know that there's so much speculation taking place today. It's at a level we've never seen before. Even things like gambling, regular gambling is going off the charts right now because people have that speculation. Maybe they're getting the stimulus checks at the same time and they're going into things that they never would have previously, but this is the way it is. Anyway, we're going to get into an interesting video. I want to show you some different stuff today, and we'll begin with these two, but I want to bring that into some others. Let's get into it right away. This is really important to address because you can measure certain things in a dollar value or you can relate it to something else. And I find oftentimes when we relate one thing to another, instead of necessarily just always basing it on US dollar or another currency, it somehow tells a completely different story. What you need has never been cheaper versus what you want. I thought this was pretty interesting. Look at this. The chart below, which I'll show you in just a second, shows the ratio of consumer staples to consumer discretionary stocks is now lower than at the peak of the internet bubble. Embracing emotions, the market is obsessed with IPOs, SPACs, and chasing quick profits. They do go on talking about different stocks like Tesla and Zoom and so on. Now, you can read it all, and I would recommend that you do so. But let me just for a second show you that chart right here. Discretionary stocks have never been more richly valued relative to consumer staples. And this chart goes back from 1989 up until the present. And we do see right here as an example, this is the dot-com boom and bust. And then we have the global financial crisis. Everybody's scared. Now today, we see again the same type of euphoria, and it's shown in different ways. In this case here, we're seeing this ratio between the two. On the left-hand side, just to give you an idea, staples market cap as a percentage of discretionary, okay? And as you can see from basically the global financial crisis and onward, this has been a trend. We're going into growth stocks. We're going into discretionary stocks. And things have really not been this way ever before. And that should tell you where the money is going into and does it have anything to do with the policies set by the Federal Reserve as well as the government stimulus. And I think that you and I would both agree that that is absolutely the case. And then we have this. The MOVE index, which is basically the VIX for the bond market. So we're measuring volatility. And as you can see, March of 2020, things got crazy. everywhere. It was crazy because nobody knew what was going to happen. How is this going to be resolved? How long is this going to take? How long will people be out of work? We're shutting down the entire world. This has never been done before, and so on. But that was very, very short-lived. And you could see that basically since the financial crisis, what's been happening? I mean, there is that downtrend taking place. And of course, shouldn't surprise anybody, down to levels we have never seen before. Because of what the Federal Reserve and the other central banks around the world have done, we have essentially muted all of the statistics. They are fading away. And that's not a good thing. You see, people believe that what the Federal Reserve is doing actually benefits the investor. In the short term, absolutely. But what they are doing here, as I have explained this analogy many times before, is essentially removing the mechanism that allows you to feel pain, for instance. So you put your hand in the fire burns, or on the hot stove, the stove burns. This tells you that you got to take your hand off of that. What else would you know? You're not paying attention. You're not looking there. You're not listening. You're not smelling the burnt flesh. You're not feeling the pain. You will keep your hand on it. And instead, we have mechanisms in place, indicators to tell us when things are getting out of whack so that we can not, as I say it all the time, not to sell everything and stuff it under the mattress, that we take precautions. That today is not possible because nothing makes sense. There are a few things here that I've covered multiple times. I just wanted to give you an update on it, make a quick point. We're looking at the US federal debt as a percentage of the GDP in the past 230 years. Understand that we haven't seen anything like this, and we will absolutely over the next couple of years go beyond what was happening in the 1940s. Now, there's a very clear reason what was going on in the 1940s and why they had to do this, the deficit spending and so on. And yet today, there's not the same situation. And it's been heading up this direction for years and years and years. This is all because of what they believe is the right way to go. Print money, do the deficits, expand the debt, and so on. It is dangerous by so many different measures. It is such a bad idea. Every example, 100% of the examples end in catastrophe. And of course, they're doing the same thing today. Here you can see a chart that I love to show all the time, but I give you different variations, whether we're looking at specifically with the US or whether we're looking at around the world. The lighter blue line, let me just pull out the highlighter here. This one right here, this lighter blue is the MSCI All Country World Index, and that is comparing it to the major economies, central banks, total assets. And of course, you are going to see that they correlate. Shouldn't be a surprise to anybody. By the way, those countries are US, China, Japan, Eurozone. So you'll note the fact that when they print money, the stock market can go up. There are variances along the way, but certainly this is the case. As you saw, the direct example of this in 2018, they were actually reducing the balance sheets, and I'm talking about fractional amounts, just a little bit on the way down, and that created such a devastating blow to global assets. And we absolutely found out at this point that the Federal Reserve, the other central banks around the world, can never take the pedal off, like completely pedal to the metal. They can never stop that, or else they will create a disaster. Instead, by doing what they're doing is also guaranteeing another disaster, just in a different way. So it's going to be absolute madness. My favorite Janet Yellen had this to say: we need a package that's big enough to address this full range of needs, and I believe that the American Rescue Plan is up to the job. We face a huge economic challenge and tremendous suffering in the country. Not for her. She made $7.2 million over the past couple of years, not a problem there. And not to Jerome Powell, because the guy is a multimillionaire. So no problems there. And no problems to those who are benefiting from all the money printing, but certainly the average person who doesn't show up on the absolutely stupid 6.3% fake U3 unemployment rate. Well, this is all just a show. This guy right here, don't even know who he is. It's a show. This person right here, just a show. This whole thing is a fraud, and anybody who believes the suits and ties is simply deluding themselves. This is an interesting one that I think people should be aware of. Wanted to bring it to you. This is talking about a chip shortage, okay? Computer chips. The first hints of trouble emerged in the spring of 2020. The world was in the early stages of what was happening at the time, which first obliterated demand and then supercharged internet and mobile computing when economies regained their footing. That about face, in a span of months, laid the seeds for potentially the most serious shortage in years of the semiconductors that lie at the heart of everything from smartphones to cars and TVs. This is the chart that corresponds to that information. Rising imports of chips. China imported almost $300 billion in chips in 2020 from the top 7 sources. So you can see the different countries there. But essentially what we are seeing is this huge demand. And that is something that tells you that there is a need for this type of product, whether it's coming in the form of a cell phone or cars, as they say here, which I'll show you more in just a second. But ultimately, there is some serious demand. We have different industries that are really benefiting right now. You know what's going on logistically. There are some issues that are taking place. The ports are delayed. Shipping is rather expensive for different reasons. The supply chains are still broken to some degree, depending on where you look. So there's still some wacky behavior taking place that's going on today. And I think that is going to continue into the remainder of this year. And then this right here, Nissan suspends some truck production in Mississippi due to chip shortage. So you can see that it is having a dramatic impact on different industries. Quick note for Australia, then the UK, and then we're going to look at Italy. Let's go with Australia first. Australia will need very significant monetary support for years, according to the central bank. So, of course, you know what that means. Devaluation of the currency, sacrifice the currency, sacrifice the savers, and try to make this a point that's going on globally. Australia will need to maintain very significant monetary support for several years, with the cash rate set to stay near zero for as long as necessary. Thank you so much. Interest rates at rock bottom, and yet when people borrow on their credit cards, it's 17%. Yeah, you know who wins with all of that. The Reserve Bank of Australia held this cash rate at a record low of 0.1%, and we'll see what they do. Of course, they're buying the bonds as well. This just tells you that they are falling in line with the rest of the countries around the world. My friends in London, you got to tell me what's going on there. I had to show you this. For sale, London's thinnest house. Okay, so you could see the guy right here. They actually couldn't put the staircase right in. They had to do this sort of attic style thing so that they can have more room in there. If you go down, look at this example right here where you can see this guy just putting his arms in between it to, the how narrow it is. Looking down a little further, look at it. This room is literally just a bath. Then you could see it right here. All right. It's literally this blue area. That's it. That's all this place is. It's a sliver. And guess how much this costs. By the way, the 5-floor house is just 5 foot 6 inches at its most narrow point. I think it would be like being in a coffin, personally. But I believe I read, if I'm not mistaken, $1.3 million. Let's see. We're going to go through this in real time. $1.3 million, 1.1 million euro. That is unbelievable. Unbelievable to see it. So there's clearly demand for houses right now. And that must have been, certain areas. Obviously, other areas are not going to do as well. But I want to know what's going on with you. If you are in London, if you are in the UK, I definitely want to hear what you have to say. Last point I wanted to make for this video, just a little bit of humor here. We're talking about the central bankers. We're talking about all different countries today. And here we have the potential that Mario Draghi, and maybe by the time you're watching this video, who knows, Mario Draghi is going to be in the lead of not the ECB, but they're thinking about putting him to basically lead the country of Italy. I don't know. I really don't know how in the world this is ever allowed. I think it's the statistics show that every 13 months, Italy's got a new government. I mean, something has to be done to fix this from the core. I know that's easier said than done, but there is just problem after problem. There is so much debt. There's so much waste, and yet it's a huge economy. There's tourism, there's exports, there's so many different things that, with trade and everything, they have so many different advantages, and yet they have so many different problems. In fact, if you are from Italy, please let me know what you think are the issues that are going on, that have been dragging on, and what you think can be done. That's all for this video. If you found it informative, hit that thumbs up button. If you hated it, give it a thumbs down. If you want to learn about e-commerce, you can do so for free, the AmazonGPS.com. If you want to understand the financial system top to bottom, talking here about China's US relationship, I talk about the IMF, I talk about central banks, I talk about how to make money, I talk about different strategies as well. Definitely check them out at the link in the description. And if you want the audiobook, that's available at themoneygps.com. Have you seen this video yet? If not, highly recommend checking it out. Click it and I'll see you there.